So inflation may be starting to cool off, and July CPI data shows that inflation increased at 8.5% year over year, but it was down from the 9.1% in June. And the producer price index decreased 0.5% in July. The year-over-year gain was 9.8%. Now markets have been rallying on the expectation that with inflation not heating up, the Fed may ease on its tightening. So the question is, have we hit a bottom in the markets? Has inflation peaked? Or is this just a temporary lull with the Fed, will the Fed loosen up on its tightening, or will it continue to raise rates and sell off assets? And, how does this Inflation Reduction Act fit into all of this? And, again, welcome back to Bitcoin Advisors channel. My name's Chris Mitchell. I'm bringing you this video from Westlake Village, California. And it is early Tuesday morning, and I just want to get right into it. And we know the Inflation Reduction Act has nothing to do with reducing inflation. It's just a way from them. It's a stimulus package to spend money and to tax the rich. And so, in fact, they're going to raise taxes on everybody. So it's, a complete, a fool's errand. So they think it's in disguise, but it's really not. So what are we going to cover today? We'll go over some crypto news and some Bitcoin price action and potential targets for the long term and the short term. And, again, the only way to get rich right now is to understand crypto, understand how to trade these dynamic markets. And we do have, I believe, the FOMC meeting. The minutes are going to be released, which has affected markets in past times. And I just wanted to get the chart naked here real quick, take all the indicators off and just look at some price action. And we can see on the daily time frame, we are making higher highs and higher lows, right? You got the first one here, that was a higher high and a slightly higher low, higher high, higher low, higher high, higher low. And now, to confirm this as a local high, any kind of a closure really below, call it 23,800 today, and I would say that would be confirmed. And a couple things to note. I'm going to throw some indicators back on here. Does feel a bit naked here. So what do we have here on the daily time frame? We will have, that will be the third drive of hidden bearish divergence. Prices making lower highs, RSIs making higher highs. And that should get you a move to the bottom side of the range at a minimum. Is that going to come in at 22,685 or somewhere in this range right here at about 21,300? And I will say this, if we do lose 22,500, I am expecting a move all the way down to about 21,000. And really, I'm just going to draw this out again for you guys who haven't been following along over the past couple of weeks. But we have this formation going on here, which is call it a rising wedge, which is a bearish formation, and these are statistically more likely to break to the downside. That being said, I do think there is a 20% move incoming for Bitcoin. Could be to the upside or to the downside, and with a break of this channel, I would expect a quick move up to this purple 200 at, that's coming in, I hate to say 30,000 because I've been saying 26 to 28,000 all month long. I do believe we will run into some selling pressure at this wick if we do head to the upside. However, what you can see here is as price has been making higher highs. That'd be 1, 2, 3, and we will confirm this as a local high with any kind of a closure here below today, below 23,855. I want to throw a fib on it really quick from the low to the high here, and that would be below the 618 definitely. No, excuse me, the 618. That's where I would call it official. Any kind of a daily closure below 23,500. If you're a little more aggressive, you could say, you could say it right here. If you're aggressive, below the 382, typically going to get a run down to the 786 fib. And then, with a closure below this guy at 23,500, that would confirm this as a local high, and I'd expect a move to the bottom side of the range. And I will continue with saying, hey, if we do want to break this bottom trend line here, the bottom side of this rising channel, that is very likely going to beget some continuation to the downside to the tune of about 20%. So that's what's at stake here, a 20% move. Anytime we've seen volatility get this low on the daily time frame, statistically speaking, the average move is about 20%. And again, volatility is direction neutral, so it's not telling us whether it's going to go up or down. However, this guy right here, the stochastics, is what tells us whether the move is going to go up or down. And so let's look at the last time volatility was extremely low, and just the last couple of times. So I want to mark that off of the horizontal here. And as it begins to expand, so that one looked like it didn't get it right. This one right here, excuse me. Let's see, I'll mark this one off right here as well. And 3 times makes a trend. 3 times makes a trend. And I'll mark this one off here as well. So, and why not do a fourth here? And as volatility begins to expand, so what we want to look for is what the momentum indicator is doing at the time volatility was very low and began to expand. Well, we did get an upside move. Yeah. Okay, so it did catch the direction of the move. This move was not 20%. Again, it's not going to be 20% every single time. But if you go and back test it, taking years of price action back, typically you're going to get somewhere around a 20% move. And yeah, so let's just take the first one back here. So volatility is low, Stokes crossed to the upside, and what do we have here? So the cross is up right there. The move here was 12% to the upside. Okay, what's going on here is volatility is very low. It actually crosses right here to the downside, so maybe we move this point back slightly. And what do we have here? From this high to this low, that was a 33% move. So the crossing of the Stokes is going to give you the momentum of the trade. And by the way, you can set up TradingView for free, follow along, and start to learn some of these trading skills. I definitely recommend you do that. There is a link in the description below, free tutorial on how to set up TradingView. Okay, next point here. Volatility is low, and the Stokes are crossed down. And what kind of move did we see out of this guy right here? Top to bottom. Well, be fair, 15% there. This move here, that was a 20% move there. 24% move there. So again, volatility is low. If the Stokes cross to the downside, which they've just done, that's going to give you that continuation to the upside or to the downside. So volatility extremely low. Stokes are kind of flip-flopping around here. That's a hard one to read. Maybe if we get in here. And it does look like Stokes are crossed up here. And we did get a slight move to the upside here. 8% to the upside. And I would say in a downtrend, you know, the moves to the upside are going to be smaller than the moves to the downside. This one here, Stokes were down, and we got a quick move down and then a shot up. So that's why, again, I do talk about, you know, when volatility gets above the 20 percentile, you know, regains the exponential above 20%, and that's going to get, you know, a pretty decent sized move. So where are we at right now? Well, volatility was very low right here. Very low right here. If we marked it off, it would be something like this. Marked it off, and this has Stokes, which are crossed to the upside. So we did get the first part of this move, an upside move, which was to the tune of about 8%. And now what's happened is Stokes have crossed back down, and this is what I had mentioned yesterday, is it might not be the kiss of death yet. Even though the Stokes are crossed down and volatility is low, now it is declining. What we want to see is volatility get above the 20 percentile and get extremely erect, just like this. We want to see it go psh. As soon as we cross this threshold and you get these two lines running parallel to each other. So what may happen, as Bitcoin has been extremely boring, just trading sideways, boring everybody to death. It's kind of been like, you know, rubbing sandpaper on your eyeballs. It's just not been fun. But what could happen here is volatility comes back down slightly, and then we get the expansion, and that's probably going to give us an even bigger move. So again, when the volatility starts expanding above the 20 percentile, or this pivot right here, the 20%, and these two lines are running parallel to each other, that's when I would say the big move is incoming. And bearish divergence is a great indicator to give us that move to the downside. And do we have any bullish divergence on the other side? And that is when price is making lower lows and RSI is making higher lows. So we don't have any lower lows here. We just have higher lows. So in an uptrend, prices, hidden bullish divergence is when price is making higher lows and RSI is making lower lows. So do we have any lower lows on RSI? No. So I would expect, in order for us to pick up any bullish divergence, hidden bullish divergence, we would need the price to make higher lows while the RSI is making a lower low. So in order to start making lower lows, the RSI is going to have to get below this guy or even below this guy, really right here. And that could line up with another bounce along this trend line. Let's say we come down here, that would be a higher low in price, and RSI definitely could get lower. Remember, the more touches to a trend line, the weaker it gets. So do we have more touches to the upside or to the downside? And kind of the rule of thumb is you're going to get 3 bounces and then a break, right? So, or 3 touches and then a break. And that doesn't always hold true, but we have 1, 2, 3 times that we bounce off this trend line to the downside. To the upside, what I consider these, we almost have 4 to the upside. So I definitely say it is getting weaker to the upside. So I think, coming into next month, September, when the CPI data is released and the Fed makes a decision to either continue to tighten or to instead of doing 75 basis point rate hikes, maybe do 50 basis point rate hikes. I personally don't think that that's going to happen. I think they are going to continue to tighten. I think inflation is totally out of control. They're fudging the numbers as it is. Inflation is not at 8%. It's not at 9%. It's more like at 20% right now. If you look at the things you need to survive, like milk, bread, and gasoline, prices are just skyrocketing. Food prices are skyrocketing. And, again, it is the whole Janet Yellen, Jerome Powell trying to put wool over the sheep's eyes, right? And we all know Biden's got wool over his eyes, and he can't barely get off the airplane. But poor guy, got to pray for Biden. So that's what I'm seeing on the daily time frame. I do want to peek at the CMEs as well, and we have the same divergences playing out. But again, as long as we're holding the 21 on this guy right here, technically, you could expect another higher low to get put in because we are making higher highs and higher lows. And here is the more consequential read here. The same read, and the Stokes will catch the momentum as volatility expands. We expect price to go in the direction of the trend. We are still, in my opinion, in a daily downtrend as long as we're below 31,500. And the same thing on the 2-day time frame here. This is just a lower high, this is like a complex lower high. And really on CMEs, if we start to close below the 382, that's going to be a big indicator, 22,000, call it 22,500, that this rally is perhaps over. And we did mention yesterday that Stokes would cross down below, I believe it was 24,100. We got the cross down. So now we want to see volume start to pour in. And if we can get some big volume spikes, that will look good for, 1, 2, perhaps 3 drives of bearish divergence, getting us a shot all the way to the bottom side of the range. So let's measure it out on CMEs. What would a 20% move look like from this region right here? 20% to the downside is going to take us right to the bottom side of the range. And that would be more in alignment. So volatility on the 2-day, that's the 2-day. Either way, it's going to be the same percentage on the daily time frame. Again, to the bottom side of the range here. If you consider the range 24,000 to the upside, 18,650 to the downside. On the weekly time frame, we did play out a pretty good bounce, and if we cannot close this week above that 9 exponential, that is going to look like a rejection, and we will cross back down below 20,500. So this is the mean reversion bounce we were talking about. As volatility is declining, right, the average price it essentially goes up, showing that volatility is going down, if that makes any sense at all. I would be aware, still there is a threat to get the gap filled and rejected at the 21. And here's another thing to note. Today, NASDAQ's down almost 1%, S&P down 0.25%, and again, if you're bullish on this market, and I was talking to somebody today that was saying, hey, look, I think Democrats are going to lose the midterms, which I do think that's the case, And then going into next year, we're going to have a rally in stocks because the Democrats are going to get out and the Republicans are going to save the day with the midterms. And one thing I like about the charts is, hey, look, they don't lie. And this is the 6-month time frame, one of the most powerful time frames in all of trading land. And I just want to remind people, this is what the S&P 500 looks like, okay? Here were the lows in COVID, okay? And here was the 2009 lows, right? How long did it take to get back to even? That was 2007, and then by 2013. So almost a 7-year bear market. Well, I wouldn't say that a 7-year bear market, but 7 years to get back to even. So if you didn't have some kind of risk management in place with these stocks, and your 401k, your 401k got chopped into a 201k, right? It took you 7 years to get back. You went from 401k to 201k, and it took 7 years to get back to a 401k. And now everybody's kind of in the same situation. People don't have a plan. People don't. All they are is, hoping. They're looking at their statement and they're going, okay, I'm just going to wait till I get back to even, right? I mean, that's just not a plan, if you ask me. And I do believe the market, at a minimum, S&P comes down to this little box of the green box of peace and prosperity, or death and despair. If we get below this green box, really below an open and closure below the green 55, that is going to look good for a move all the way down to $874. And what kind of a retracement would that be from the top to the bottom? Here's 50%. That would be an 80% correction. Let's compare that to the 2008 crisis. 58%. The dot-com bubble, 50%. But here's the problem. The last time we got a bearish engulfing candle, the last 2 times, this was 1973. The market went from the high to the low, okay, down 50%, not bad. What happened in the Great Depression? Bearish engulfing on the 6-month time frame, down 83%. Took 20 years to get back to even. So a lot of people that tell me, hey, look, I'm in the retirement red zone and I just don't, I don't have time to start all over again. They're looking at cryptocurrency like, oh, I'm going to buy some crypto right now to save my retirement. And, that's a good way to get beat up. That's a good way to get hammered. Listen to the commercials on the Super Bowl. Listen to the commercials on TV about buying Bitcoin, and El Salvador's buying Bitcoin. If you don't have a trading plan, you're just gambling. And what's a trading plan? That is an entry point, an exit point, and risk management. Anyways, that's it out of me for the TA today. And look, I am still seeing all over the interwebs people talking about XRP and Cardano. And XRP, why have I been a bear on XRP and calling it, an absolute doggy coin? And this is why. This was the 2018 highs, 320. XRP never took out its all-time high. So when Bitcoin hit 20,000 here, it hit 60,000 or 69,000 here. XRP never took out its all-time high. That is a sign of weakness. And if this one, loses the lawsuit, I mean, already I can see this one easily coming down as Bitcoin gets rejected on the next leg down. XRP could easily come down to 19 cents. If it starts to lose this region right here at 13 cents, you kiss it goodbye. Kiss it goodbye for a long time. That's XR downo. So I don't know how people call. Anyways, why somebody wants to invest into weakness? There's so many other coins out there that have. And again, this isn't a endorsement or de-endorsement. If you're in the XRP army, power to you. But Cardano looks just as weak. And here's the thing about Cardano. Where's those 2018 highs? I think I need an older chart. Let's see if that does it on Binance. Oh. Somebody's going to say, Chris, Cardano was not even available prior to 2018. Okay, that's it. I'm giving up on that one. But needless to say, this is a nasty chart. And we had this drawn out from way back here. A move almost got hit to the T. You know, close enough is close enough. And where do we get that structure? Well, I'm willing to bet the good old Fibonacci retracement tool told us as soon as we broke one of these major horizontals, so anyways, we call this a head and shoulders. That's what it was. Head and shoulders, I mean, multiple shoulders here. Look, sloppy if that, but with a break here, we had a measure move, pivoted down to you know what? That one, I'm just making myself look like a fool. Let me get in the daily chart. That's what I get for doing some random TA on this this asset. So we are bouncing off the green 55, getting rejected. Do we have the same divergences playing out? Yes, and to confirm this as a local high, I would want to see a closure below 50 cents. If that does happen, I am expecting a move back down to 43 cents. And for these wicks to get filled out, volatility is expanding right now. We're not above the 20 percentile. Stokes will cross down below 54 cents. That's on a 2-day time frame. On the daily time frame, Stokes are already crossed down. Volatility did get above 20%. And the bearish divergence is playing out, and that would be 1, 2, 3 highs. And I would almost already confirm this as a local high. As soon as we get below the green 55 here, I would be willing to call this one at least a shot down to 46 to 41 cents. And that would happen somewhere over the next week or so. And that is if Bitcoin plays its 20% move to the downside. So if Bitcoin gets a 20% move, statistically, that's what we're expecting incoming here. 20%, that'd be 26% to the bottom side of the range on Cardano. And if this structure does break here, I would look at this next target to the downside from this high to that high, somewhere around the 23 cent range. And that could get pretty nasty for Cardano, which is literally, that'd be a 58% drop. So I'll be keeping an eye on this one as well. Lastly, I want to check in on the dollar bill, the dollar. So we did say this is the pivot to get above here, 106, call it 107 yesterday. I think we said 107. I'm just going to raise that up slightly here and say, hey, look, if the dollar does start to get above 107, which it does look like it's already confirmed, 3 drives of hidden bullish divergence, or excuse me, is that regular bullish divergence? Price is making higher lows and RSI is making lower lows, and that would be it. It would be hidden bullish divergence. Where is that coming from? this point, and this point, and that should get you a shot to the top side of the range. And I'm looking for this to get extended at least up to here, and if this area breaks 107.42, which you could be more aggressive and say if it breaks 107, we'd be looking for a move all the way back up to 108. Volatility is above the 20 percentile, is expanding, Stokes are up, and we have the bullish divergence. So that is looking good for the dollar being bullish, and that is a negative to stocks. So, and vice versa. I mean, if we can come take out this low on a reversal here for the dollar, if the dollar starts to close below the green 55, or call it the 618 right here, below there, so below 105, good for Bitcoin. Above 107, bad for Bitcoin on the daily time frame. All right, that's it for today, guys. I'm going to wrap it up. Hope you have a blessed and highly favored day. Now, following up to the crypto section, news section that we have, I wanted to bring this article to you. This guy, Do Kwon, the founder of Terra Luna, breaking silence triggers responses from the community. So while Tornado Cash developers are fearing for their lives, Do Kwon is partying to podcaster Eric Connor. And yes, the CEO, Do Kwon of Terra, and co-founder, broke his silence about the collapse of their Terra USD stable coin. The community responded with various sentiments against Terra executive. Despite Kwon's attempts to clear his name in an interview, community members remain unhappy with the Terra CEO. In a tweet, podcaster Eric Kroner compared Do Kwon's situation with the Tornado Cash developer who has been arrested. According to Connor, Kwon scammed billions and is still partying, while Tornado Cash developers wrote some code for privacy and are now fearing for their lives. So honestly, I have no mercy for the people that didn't have a trading plan set in place. Sometimes your biggest losses can be your biggest lesson. So hopefully anybody that took a big loss is now rethinking what it means to own cryptocurrency. It was the strongest altcoin out there, and she imploded. And so, yeah, I mean, don't cry over spilled milk. All right. Next thing up, I wanted to tell you guys about this crypto mixing service, Tornado Cash, which was blacklisted by the U.S. Treasury. So the department barred its use of U.S. persons as a matter of national security because North Korean hackers allegedly used the mixer to launder stolen crypto funds. So the U.S. Treasury Department banned all Americans from using decentralized crypto mixing service Tornado Cash. The Office of Foreign Assets Control, OFAC, a watchdog agency tasked with preventing sanctions violations, on Monday added Tornado Cash to its specifically designated national list, a running tally of blacklisted people, entities, and cryptocurrency addresses. As a result, all U.S. persons and entities are prohibited from interacting with Tornado Cash or any of the Ethereum wallet addresses tied to the protocol. Those who do may face criminal penalties. And Tornado Cash, right, has been a key tool for the Lazarus Group, a North Korean hacking group tied to the $625 million March hack of Axie Infinity's Ronin network, according to the Treasury Department. Again, blockchain analysts showed that tens of millions of dollars worth of crypto stolen from Ronins flowed through Tornado Cash, which is designed to obfuscate the source of funds. OFAC previously sanctioned Blender.io, another mixing service that the Treasury Department alleged was used to launder proceeds from ransomware attacks, as well as about $20.5 million in crypto stolen from Ronin. Tornado Cash has been the go-to mixer for cyber criminals looking to launder the proceeds of crime, as well as helping to enable hackers, including those currently under U.S. sanctions, to launder the proceeds of the cryptocurrency of their cyber crimes by covering up the origin and transfer of this illicit virtual currency. So how does this Tornado Cash work? You steal some crypto, you throw it in the Tornado Cash blender, and it probably spits out Ethereum or some other kind of token that makes it untraceable where the funds came from. And, what do I think of this? I think Ronin should have had a better solution to not let their chain get hacked. This is the game of cryptocurrency wars out there. And if you have some kind of a blockchain that is not able to withstand the hacks like Bitcoin has, and again, that's why everything besides Bitcoin and Ethereum I see as, essentially a shit coin, right? It's just, a risk, a very big risk, because anything like this can happen any day now. Nobody's proven the test of time. Nobody grew to $1 trillion market cap faster than Apple, Microsoft, and Google, right? Bitcoin has been unhackable, and Ethereum's just got an incredible use case and network effect. So, Bitcoin is digital gold, Ethereum is digital silver. And even those, I say, look, don't invest more than you can afford to lose completely. These assets are extremely volatile and brutal. So I hope you guys take that with a grain of salt. Hope you guys have a blessed and highly favored day. I'll be signing in tomorrow with some more crypto news and some Bitcoin price action. Take care.